Hello all, and welcome to the 2022 Haas Forum. This annual event, hosted by the Haas Alumni Relations Office, is now in its 20th year. The forum is dedicated to showcasing Haas thought leadership, and this year our panel discussion will focus on trends in blockchain and crypto. We're grateful to be able to reach beyond the Bay Area in our virtual format to engage alumni and friends throughout the globe. My name is Karin Bauer, and I'm a proud graduate of the Haas full-time MBA class of 1994. Additionally, I am the program director for the Berkeley Haas Blockchain Initiative, a strategic partnership with Ripple to support academic research and accelerate learning and innovation in blockchain and crypto at UC Berkeley. To date, we have awarded over $1 million in funding to support a wide range of research projects, academic courses, and student-led activities that focus on topics in blockchain, crypto, cryptography, fintech, and financial inclusion. Blockchain and cryptocurrencies are paradigm-shifting technologies and transformational global economic phenomena. The White House reports that 16% of adult Americans, or roughly 40 million people, have invested in, traded, or used cryptocurrencies. This morning, the Biden administration announced an executive order on digital asset policy, which will address key issues such as consumer protection, financial stability, national security, and climate risks. Working together with the US Treasury Department, the Biden administration will also consider the creation of a Federal Reserve-backed US digital currency. Turning to our present topic, I'm sure our audience today is a mix of those with just a cursory understanding of blockchain and crypto, but a strong interest in the possibilities, or those who are also already very deeply embedded in the space. Work in this space spans a variety of industries and functions, and we're lucky to have a panel of distinguished Haas alumni who demonstrate this breadth. It's my pleasure now to welcome them. Thank you so much for being here tonight, Dimitry, Justine, Coco, and Tanya. I'm going to ask you to introduce yourselves briefly, starting with Coco Key.
Hi, I'm Coco Key, full-time MBA. I'm co-founder of Key Global. We advise and invest in blockchain-enabled fintech startups that provide infrastructure and solutions for crypto and digital assets. I've been living and working in New York City and Princeton since graduation in 2002.
Tanya?
Yes, hello everyone. I'm excited to be here today with other Haas alums. I am a graduate of the Haas MBA from 2008, and I've had the opportunity to be deeply involved in the blockchain space for the past couple of years. Most recently, in the recent past, I was VP of product for blockchain at VMware, where I had the opportunity to work on some pretty industry transforming use cases. And I'll be sharing my personal opinions today. Hopefully those that will reflect well and be interesting to folks from Haas. Thanks for having me.
Dimitry.
Hey everyone, I'm a research partner with 1KX. We're an early stage crypto fund that started in 2018 that's focused on bootstrapping token networks. And we primarily lead seed and Series A rounds with the focus on DeFi, NFTs, and infrastructure. And my role here is effectively 3 hats. One is general research, do a lot of writing on Medium across a number of topics, portfolio support, helping with go-to-market strategies, BD, kind of token design, and kind of general investment due diligence. And I've been investing in crypto since 2017. Spent a year with a fund out of New York called Coin Fund, focusing on investment, DD, and research, and then 2 years with a family office outside of Dallas called Bollinger Investment Group, where I led crypto investments and research there.
Excellent. And Justine.
Hi everyone, I'm Justine Humannansky. I went to school with Dimitry, so I graduated from the MBA program in 2020. I currently work at an early stage crypto startup called RabbitHole, so we're helping guide users through Web3 and helping protocols find the best users and contributors for their communities. I'm head of strategy, business development, and meta governance there, which is our community-driven, one of our community-driven DAO-like structures. I also contribute to 3 other DAOs, work for Stanford's Future of Digital Currency Initiative, and also working with World Economic Forum's DAO governance working group.
Fantastic. Well, welcome to you all. So let's just dive in. And I've got a question for you all. So there are many avenues to work in blockchain and crypto. Can you please share with us a little bit more about your personal journeys and what led you to pursue opportunities in this exciting space? Let's start with you, Tanya.
Sure. So just a little bit more of background so that you understand where my perspectives come from. Prior to my MBA, I have an engineering background, so quite technical, definitely drawn to innovative technology, especially where that technology also can, drive new business value and so on. And also very much drawn to deep experiential learning. So with blockchain, these really come together, right? There is a net new technological innovation that's underlying this. There are very new and unique use cases that the technology then enables. And also there's a human behavior factor that I find that's also kind of new and brings a different perspective to the space. So from my perspective, just, those 3, it was definitely a recipe for an experience that I expected would be very meaningful. I was at Google prior to joining the blockchain space. I've had various roles in the enterprise technology space and so on. I, to a certain extent, made a big transformation. I went from Google to a company that's fairly small by comparison called Dfinity. And then from there to VMware, where I did product management for a blockchain product. I will say I'm very, my starting point is always the technology. So for me, working on a technology platform, a blockchain platform was very interesting. And then bringing that to customers who could then use it for very interesting use cases was very rewarding.
That's interesting. We'll hear more about your enterprise experience later in the program. And meanwhile, let's go over to Justine.
Sure. So I got involved in the space in early to mid 2017. I went to a wedding in New York, and one of the early members of Coinbase was there. At the time, I was an equity research analyst at an investment bank, and I covered all the Web2 large cap internet companies. So I had spent, 3 or 4 years analyzing exactly how those companies worked. And when I met this person from Coinbase, they told me to listen to this podcast about Ethereum. And when I listened to that podcast, I kind of saw the technology as a way to address some of the issues in Web 2 and more of an infrastructure that you could build applications on, et cetera, as opposed to Bitcoin, which I knew about before, but that's not what made me go down the crypto rabbit hole. And that was around the same time I was applying for MBA programs. So I actually went to Berkeley specifically because there were some resources and avenues to get involved in the space. And that wasn't true of many other universities. So I got involved with blockchain at Berkeley. I've done kind of a wide variety of stuff in this space. So I was really interested in digital identity to start. So I worked on some research looking at kind of decentralized digital identity. I helped Samsung's venture fund build out their Web3 thesis in 2019, which I don't think they did much with, but anyways. And then, I worked with a few different venture funds, and then started getting involved in the formation of some DAOs, helped Berkeley mint their NFT, which is the Nobel NFT, and joined. So I was basically part-time in the space for 4 years, and then took the step to join full-time this past July, and joined this early stage crypto startup called RabbitHole.
Excellent. So I think that one comment I want to make about your journey in particular is that for current students, listening, just be aware that there is not a linear path here. And Justine is one of our best examples of someone who has just grabbed all these different paths and avenues and followed her interests and has woven together a really a very interesting and unique and personalized career path for herself. So, you know, there's more than one way. All paths lead to the one, but there are numerous paths. So Coco, let's hear from you. How about your personal journey in getting into crypto and blockchain?
Sure. So before I got into this industry, I knew nothing about blockchain and crypto. And I came from a background of theater, drama, and literature. So no technical background at all. So after Haas, in 2002, I spent 5 years in fintech in New York, building FX electronic trading platform. Then I founded Key Global to continue doing fintech, at the same time trying new things such as pre-IPO, company restructuring, and fundraising. And 2016, I started to learn about Bitcoin, cypherpunk, etc. It didn't take long for me to fall down the rabbit hole. So the more I read about Bitcoin and its underlying technologies, the more I realized it was something really big. I particularly like the idea that the technology allowed more transparency, privacy, and decentralization. So I told myself I wanted to be part of it, but I had no idea where to start. So I kept going out and networking until I got pulled into two new ventures. And one was the Layer 1 protocol project, and the other was a startup offering blockchain-based crypto products. So those two projects were the defining moment. They helped me see for myself what the technology can do. So the past 5 years were the most exciting time of my career. I dropped everything else and I go all in.
It's that is also, you know, what's clearly emerging here is a message of personal innovation or incentive and sort of curiosity that all of you have. And so I'm expecting we'll hear something similar from Dimitry, who will round out this conversation.
Yeah, for sure. I think for me, it was a long discovery process. Before Haas, I spent 6 years working at a bank. The first 4 were doing a variety of strategy roles, often at the intersection of finance and technology. So we were building products around real-time payments and big data analytics. And I grew up in New York, so our offices were on Wall Street. And in 2013, I was doing research for the bank's head of payments on Bitcoin. And place, ironically, near the New York Stock Exchange called the Bitcoin Center. And I remember going there and, you know, seeing people trade Bitcoin peer-to-peer and sell custom mining rigs. And, you know, met Vitalik, like the Ethereum founder there in 2014 when he was doing like the Ethereum pre-sale. But at that time, I didn't really think too much about the tech, just thought it was mostly used for illicit activities online, but did see that kind of software was eating finance. And at the time wanted to help the bank compete. So I spent my last 2 years there building out their innovation labs, which was more on frontier tech, particularly machine learning, but we did an early blockchain proof of concept in 2016. And then I said, okay, maybe some other use cases outside of payments, but still a lot you need to do around developer tooling and regulatory clarity. So still not bought in, and went to Berkeley for more of a career transition, thinking, you know, maybe fintech, maybe big tech. And then also came across Blockchain Berkeley, and they had this really good course, which is also public, free online, on Bitcoin, but more from like a distributed systems and kind of like game theoretic perspective. And so that was finally my aha moment, where I looked at traditional fintech. And I don't mean to offend anyone who works in fintech, but I think a lot of that is really still built on some pretty archaic infrastructure. ACH, SWIFT, it was built in the 70s. A lot of these banks still run on COBOL that was developed in the 60s. I think with public blockchains like Ethereum, you get at least 2015 rails, and you could do a lot more really cool things with that. So I kind of came into the space with more of a DeFi lens. And I think what keeps me here is a lot of like the multidisciplinary and evolving nature of the industry. I think it's often like blind people touching the elephant, and like depending on which part you touch, you think it's a different thing. And I think we started with money and finance, and I think now it's propagating into culture and music and art and gaming. And I think it's actually like much bigger than we all thought it was. And I think that is super intellectually stimulating, and it's always kind of like a choose your own adventure. So yeah.
I love that. Choose your own adventure. I think that really is appealing for a lot of us, especially those of us who are, you know, kind of not content to just go do a linear career path in life. And I think that speaks for a lot of people at Haas. You know, everyone is very much driven by their own passion and their own what they see as they want to help change the world or make an impact. And what you're saying, Dimitry, and all of you really are saying is that, you know, you are 4 examples of exactly that. You know, everyone can choose their own path. So diving more deeply into your respective paths and your areas of passion and interest, I wanted to kind of ask you now a next follow-up question, which is, so many of us have heard, or even in popular press and industry press as well, for those who follow those links and leads, that there are a lot of parallel trends happening right now. And some of those trends and innovative developments in blockchain and crypto include NFT in the metaverse, DAOs, blockchain for financial services, those innovations, and then blockchain for enterprise solutions. So we have the 4 of you who are experts in each of these respective areas. So let's chat through these. And I would like to start with you, Justine, and have you share a little bit more with us about DAOs. You know, what are they? What's the big deal about them? Why are they so revolutionary? And what's the future?
Sure, I'll do my best. The first thing I'm going to say is there's no such thing as a DAO expert. We're all very much figuring this out as we go all together, which is fun and challenging. What I think is interesting is that at this point in the industry is so big that people actually have to kind of specialize on one subsegment of that. That wasn't always the case, but we're definitely at the case where for people looking to get into the space, I would recommend kind of like pick 1 or 2 areas and focus on those, because it's there's so much going on in the speed of the space. It's going to be hard to keep a pulse on everything. I'll do my best to explain DAOs. They're complex, but I'll try to simplify it so that it's understandable. Basically, DAOs are rethinking the way that we organize and coordinate people, basically. So they're you can think of them as digital collectives that come together to accomplish a certain goal. Anybody who's involved has more or less voting rights to affect what happens with that collective. And the operational and financial transactions of that collective are all transparent. And the transparency is actually pretty radical if you think about how little transparency there is in like a traditional corporation. Most of the time DAOs are compared to corporations. I think that's not the right analogy. It's probably more closer to an organism than a corporation, because the DAO kind of takes on a life of its own and evolves at the will of the people that are involved kind of on a day-to-day basis. So it's actually impossible to say what a DAO will look like in the future, because it's kind of path dependent decision making to get there. There's like different types of DAOs, so I'll try to talk about the different groupings. So in the like early DAOs tended to form kind of around a protocol, which is just an application built on a blockchain. And so those DAOs are basically collectives of token holders. You can think of them more or less as shareholders, and they kind of have governance rights that allow them to vote on changes to that core application. There's another type of DAO that's kind of what we're seeing a lot of now, which I call an emergent DAO, but that's something that starts as a DAO always. It was never a centralized company that then later decentralized. It started that way from the beginning. And a lot of those are like created, you can categorize them as like social DAOs. It's kind of like a membership club, or there's collector DAOs that come together to purchase NFTs or maybe trade other assets or do DeFi or whatever. And those can like be ephemeral, meaning that they spin up and spin down to accomplish a certain goal, or they can be persistent and have kind of like a longer term mission and last forever, basically. So there are many different types of DAOs. It's challenging to talk about DAOs as a category because they're all unique, and like a social DAO is very different than a protocol DAO. So it's very hard to make generalizations, but to try to generalize, just that was impossible. Some of the benefits are basically like you get to leverage the kind of collective wisdom that comprises this group. You can reach massive scale if you're a business, again, because everybody who's kind of part of the collective can do part of the work. And theoretically, it would be, there wouldn't be like a single point of failure, and you have more transparency. Some of the challenges are having kind of this open democratic governance process for all decisions involved in coordinating and organizing people can be extremely inefficient. It can be slow. Voter participation tends to be very low. I think that's because we have kind of this one size fits all model for governance right now, where it's all kind of consensus based, token weighted, everybody voting on everything. I think that will evolve over time, and we'll have different models for that make it more efficient and make it so that the people that have the highest context on an issue are the people that are voting. We're also trying to figure out what the right structure for a DAO is. So there's like a false equivalency between decentralization and flat organizations, and they're not the same thing. So I actually do think functioning DAOs have a hierarchy, but what's important is that the roles are elected and they're not static, right? So I like to say it's fluid, not flat, but there's lots of confusion around that right now. Kind of like brief overview about how I think the DAOs kind of evolve in the future is, I think what's interesting, we're starting to see that as DAOs scale, they don't scale vertically like an organization where you add a bunch of layers on top of each other, right? So you get that like corporate ladder reference. They scale horizontally, meaning you basically spin out mini DAOs from the main DAO that focus kind of on their own segment of work that benefits the parent DAO, and they can have their own token, they can generate their own revenue, and usually there's some kind of aligned interest with the main DAO that it came out of. But basically DAOs scale by creating like many small DAOs as opposed to one monolithic monopoly. I think the other thing that we'll see a lot more of is called meta governance, and that's DAOs participating in the governance of other DAOs. And that's basically, to some extent, what we've seen kind of like in the Web2 analogs is that, again, with voter apathy, like if I use a protocol, or if I use 20 protocols, I actually don't have time to be involved in governance of all of them. And maybe I also don't want to. It's a lot to be voting on all these product decisions. Maybe you just want to use the product. In that case, you could delegate your votes to somebody to vote on your behalf. And that could be an individual, or it could be a DAO that you think represents your best interests. So I think we'll see a lot more of that going forward. And then the other thing that's very interesting is kind of like DAO to DAO business interactions, M&A, and what all of that looks like. The equivalent is like B2B, but it looks very different. For example, because you actually acquire let's say there's a merger of DAOs, you're actually like acquiring the whole community that has all these voting rights. And so you're not just like acquiring a product or a team and then integrating them. It's like it's a kind of a whole new game. So it's fascinating. We're early. Everybody is making a bunch of mistakes in public as we try to figure this out.
You know what? I mean, honestly, what just went through my mind when you were describing all of these nuances is, my God, you're falling down the rabbit hole. And I mean, that's obviously what where you're literally working is for a rabbit hole,
Yeah.
but exploring within that whole context. So I have 1,000 questions for you, but I'm going to actually shift gears right now and ask Dimitry. Thank you, Justine. That was amazing. So Dimitry, you are working in the sphere of building out the metaverse and NFTs and investing in companies that are doing NFT, et cetera. Help demystify some of this for us. Tell us what's going on there and where you see future interesting possibilities for Haasies to get involved.
Sure. So I think I could cover just like high level mental models around NFTs and metaverse. I think, like, to Justine's point, everyone's still kind of trying to figure out what a lot of this is. But I could share some ideas that could be helpful. So on the NFT side, the way I view them is effectively digital representations of unique media assets. And these assets could be art or music or internet domains or in-game items or real estate units. This could also be kind of unique, like exclusive ownership or access rights to some underlying piece of content. And I think what makes NFTs unique is its provenance, because on these public blockchains, you could effectively link an original piece of media to its creator. And that link is cryptographically verifiable. And I think that's a super important point, because when we look at traditional media, a lot of that is kind of like this two-dimensional surface where you could only see like what's in front of you, but you don't know where it came from. And having this history almost adds like this temporal like z-axis where we could traverse and then see like what the kind of like transfer of provenance or ownership was over time. And this is like a net new behavior that's enabled by blockchains. And that's also really important because then it kind of says like NFTs are the first system that allows this kind of information to be both open and valuable at the same time by having like this record of provenance. And it really like just like DAOs are like this like complete inversion of like what we think a traditional organizational structure should be. I think NFTs are also an inversion of how we think about media ownership, because I think like traditionally, content was built on platforms. But I think going forward, platforms will be built on content. Mm. And I think these pieces of content, it almost becomes like media Legos. And there's also like very interesting tie-ins. Like none of these topics are siloed. You could have a NFT and a DAO around that NFT. So like one example is Nouns, which is this on-chain like digital avatars. It's a collectibles project, and every day one noun gets auctioned off and they get like randomly generated. So one noun per day, people are spending between like $150,000 and $250,000 for each of these JPEGs, and then that goes into this treasury that is managed by noun holders. So one noun, one vote. So it's this PFP project. It's also a DAO, and the content there is completely public domain. It's open source, so anyone could use it. In the Super Bowl, Budweiser used like their glasses in one of these. In one of their commercials, and you could create games, like comic books, clothing, anything you want on top of this content because it is open. So a lot of really interesting things there. On the metaverse side, I don't think this is a new concept, but I think a lot of it is uniquely enabled by crypto. In my view, I think metaverses are effectively a social network with a different UI. If I'm to give like a more specific definition, I think it's kind of like this concept of like a digital world with like real property ownership, open economies, and portable identities. Maybe even like a more simple mental model is it's like a country that lives exclusively on the internet without physical borders, and it has its own passports and its own money, and you could elect to join it or leave it whenever you want. And I think like a lot of those concepts are uniquely enabled by public blockchains. I think they're like enterprise metaverse is probably going to be a thing and attempted by companies, but I think there's also an important nature of this being open source. So I know that was a lot of different things.
So is it fair to say that the NFTs are part of the metaverse? You know, they're assets in a metaverse. Is that how we can think of them?
So when you think about like enforced property ownership, like cryptographically enforced property ownership, that could be land assets, and those land assets are actually NFTs.
Right. Wow. Okay. I don't know about anybody else, but my head is definitely spinning. Thank you. That was really brilliant. And I'm sure we're going to get a bunch of questions for both of you. Now moving on to kind of like a different topic. It's more like disruption of financial services through blockchain, or maybe evolution of financial services through blockchain. And Coco, why don't you shed some light for us on that topic?
Sure. So since I have been always working in fintech, first legacy fintech, then blockchain-based fintech, I just want to share some of my firsthand observations, how blockchain and crypto have impacted financial services. I have 6 items or 6 observations. And the first one is incumbents such as banks are moving into space by adopting blockchain technologies to create new systems which run in parallel to the legacy one. So the new technology enables the bank to offer 24/7, 365 real-time transfer and settlement. And those traditional banks moving fast to adopt the new technology have enjoyed tremendous growth, such as significant increase of asset under management. So that's my first observation. It's happening. And the second one is related to the first one. I see digital / crypto native banks emerging. Their solutions facilitate financial activities using crypto digital assets. We also got the world's first blockchain-based stock exchange, Boston Security Token Exchange, approved by SEC in the beginning of this year. So we also had something digital crypto asset native coming up along with the traditional banks. So the third, number 3 observation is some more financial products are now available to those who were left out before. For example, private credit investment opportunities were mostly shared among large financial institutions before, and high yield products were mostly offered to high net worth investors. Mm-hmm. Now the blockchain technology makes some financial products accessible to more people and small players. That's very encouraging. So number 4, stablecoins and cryptos are changing the landscape of cross-border payment. So more companies are using stablecoins to pay their overseas contractors who don't have USD bank accounts. And cryptos make target cross-border donations possible. Recently, an example, my husband and I donated Bitcoin directly to a person we know in Ukraine who is raising money to buy food and supplies for civilians trapped in war zones. So it would be impossible if we had no wire money. We had to wire money through a bank. So the fifth observation is almost each day we see more companies start investing in this space, including those least likely. Most recently, Citadel Securities announced to make market for cryptos. And Warren Buffett's Berkshire invested in Nubank, a Brazilian fintech bank specializing in cryptocurrency. So it implies that value and importance of this industry is being recognized way beyond those early adopters. My last observation is to reach the tipping point, we still need more clarity of regulations and need Congress involvement in crafting legislations. Last year, 18 bills were discussed in the Congress related to blockchain and crypto. Today, the president's executive order sent a very positive signal to the industry. I see more companies are no longer just a single tech player, but try to build competitive moat by voluntarily complying to regulations. So the list could go on forever. I have to stop here. It's happy to discuss more in the Q&A.
Excellent. Thank you, Coco. That's really, yeah, we are at a really interesting inflection point right now, I think, seeing sort of the pioneering efforts being moved gradually, slowly, and adopted more now finally and recognized by some of our existing institutions and systems. And that's kind of an interesting segue to move to you, Tanya, from where you sit, your experience as a veteran in enterprise technology for very well-known large companies. Where do you see the future? A lot of people have talked about enterprise blockchain as either a non-starter or yes, that's the future of enterprise, and enterprise isn't going away. I'd love to hear your perspective on what you see the future of enterprise blockchain systems to be.
All right, yeah, happy to share. There's so much to say there, but let me maybe start first with the core pieces of the technology, right? And I'll make it super simple, so that you can get an appreciation for what's kind of underlying, or what's the core pieces that are the foundation of any use case, right? So Justine mentioned consensus, right? She used the word consensus. There are these individuals, entities, companies, what have you, that come together, and you need consensus amongst them. So from a technology perspective, there are consensus algorithms that don't allow a single individual or a single entity to make a unilateral decision, right? So it has to be kind of agreed to, and once there's consensus, then something actually happens, and quote unquote state is changed in a system, right? So that's one concept. And then Dimitry mentioned cryptographic proof. So you can cryptographically prove that someone or some entity initiated a transaction, or what they, you can hold them accountable for what they did, right? I guess those are the two core principles. And when you bring them together, that's what really enables all these very cool new things that can happen, right? So, but when you take a step back, those core principles can help in many existing applications as well. And those may not make the headlines. I have a really great example with Broadridge Financials that has something called a distributed ledger repo. And they have modernized this repo transaction, which is very high, large dollar value transactions that have to be done very frequently. And it's over $35 billion on a daily basis that's being transacted on this platform, right? And that, when you look at that number, that's a bigger number than all the cryptocurrency transactions happening on a daily basis, right? So these are pretty substantial, big, high value use cases that the underlying platform there is blockchain, right? So what is the value it's providing in these enterprise use cases, and how is it different, right? It has to be different in certain cases, because the things that these enterprise use cases require can be quite different from what the public requires. And also, there are regulatory requirements, high bars for availability, quick transaction times, finality of a transaction, and so on, right? So there's all those kinds of things that have to be taken into consideration, right? But at the end of the day, this technology can, drive these very high value use cases in the enterprise, right? And they may not be hitting the front line of the newspapers, but there's a lot of, from my perspective, really, when we stop saying that there's blockchain in the platform or the underlying technology, that's when it's really become mainstream, right? And when you think of where this technology can go, one of the reasons I got really energized was it's really the next evolution from a technology perspective. We had, for those familiar, we had what we called monolithic or centralized systems. Then we've gone to these distributed systems with cloud environments, and the applications running on many machines and many servers, and those can handle faults, and that means just a server can crash and the application is running. And now we're going to an infrastructure where there can actually be malicious activity, someone's actually maliciously trying to create problems, and the infrastructure can protect against it, right? So, and not allow some malicious change of data and so on. So when you think of it that way, there are some very immense use cases where data integrity is very important, right? We're talking about financial services use cases. There are situations where, let's say, a share of a company. Do we need a paper document for that share? No, we don't need it. You can have a digital copy of it, right? And but then now it's very important that someone can't go and mess with it, right? And you can't make it disappear or replicate it and make two copies of the same data and suddenly you've doubled something, right? So how does the technology ensure that those things cannot happen? Things like what's called double spend, things like changes to the data when it shouldn't be done, and so on, right? So those are the kinds of things that are always very interesting, right? And those are a class of use cases which is just digitization of assets, and especially in the financial world. There's also, when you think of NFTs, right? What is an NFT? It's a non-fungible token, which means it cannot be changed, or it's not fungible, right? And when you think of documents like a certificate, a marriage certificate or a license or your digital identity, those essentially are non-fungible tokens, right? You want it to represent something that cannot be changed. And there is a vast set of use cases in the public sector related to digital identity, related to document verification and so on, that can also leverage the technology, and we're seeing good examples of things happening there. And then there's another class of use cases related to supply chain. Again, there are multiple entities that all are part of a single pipeline, so to speak, right? And there's a lot of inefficiency in terms of who owns the asset at what point in the supply chain, and how is ownership transferred from one piece to another, and so on. And having a blockchain there where all entities can see the same data at the same time. There's cryptographic proof of who's done what, and if some error occurs, you can go back to the system and find out exactly where the error, I shouldn't say error, but where some inconsistency is in what the expectation was, and so on. So it's a very interesting technology that's really enabling. At the end of the day, it's reducing a lot of business risk, because multiple parties can transact with each other, even though there's a higher level of trust, right? Yes, because I trust a party that I'm transacting with, but honest errors, mistakes, issues, the inefficiency of kind of even sharing data amongst each other, finding if there was if there are disputes, resolving disputes, and so on and so forth. Because those inefficiencies are improved, a lot of these companies don't have to keep so much in reserve to, if an error occurs, they have to go and take their reserves to fulfill it, right? So by not having to keep those reserves, there's a lot more liquidity in markets. Things can be done more quickly. Things can be finalized more quickly. People know where they stand, there's all those kinds of things that are enabled in the enterprise space. So to me, that's also equally fascinating as all the exciting things happening in the DAO world and the tokenization world and so on, and a lot of meaningful, value being generated by the technology in the enterprise space as well.
Fascinating. So it really, what you're saying is that blockchain will affect every single department, function, area of an organization, or it can, and what leads me to think that could also be an interesting opportunity for people already working in those organizations to get involved should the organization decide to innovate and evolve and adopt or explore the adoption of blockchain solutions in those areas. So you can be an entrepreneur and make sort of move your organization along internally as much as you can take a pioneering role in a DAO or a company working on products, gaming, whatever industries are currently popular in building metaverses out and doing NFT solutions. And so I think what the four of you are all really pointing to is that this is really truly a kind of a omnipotent and omnipresent potential blockchain and the cryptocurrency solutions that run on blockchain. Everything ultimately kind of resides on a blockchain at the end of the day. And Tanya, that was a really excellent summary of a variety of different use cases that make me kind of see beyond just the ones that we hear the most about nowadays. There's so much potential and so much opportunity. So very, very exciting. And thank you to the four of you for getting this conversation started. And I think what we're going to do right now is we're going to turn, now that we've heard from all of you about what excites you most about these innovations in blockchain and crypto, let's turn to some audience questions and see what's on everyone's minds and help round out our understanding. I do have the first question here, which I'd like to ask of you, and any one of you can chime in on this response, is, so you all have varied careers and journeys. What are your tips or recommendations for Haas students and alumni who are looking to break in or pivot into any one of these areas?
I would say use the tech. I think we could talk about this all day long, but I think you need to experience what it is and how painful it is. And that's just the whole process. So get a Coinbase account, set up a MetaMask wallet, go to DeFiLlama.com, look at all of the largest protocols on Ethereum by TVL, Total Value Locked. Use every one of them, Uniswap, Compound, Aave. Spend more money than you should, paying for kind of like gas fees. Play Axie Infinity. Try to bridge assets onto Polygon or Arbitrum, which are other cheaper, more scalable solutions on top of ETH. Join a DAO. I go to gov.indexcoop.com. They have flexible ways to join, depending on your time commitment, whether you have 5, 10, 15, 40 hours a week. And I think that and also read the Ethereum white paper, read the Uniswap v3 white papers, sign up to newsletters. I think they call this a rabbit hole for a reason, because there's so much you could do here. But I think out of all of those, using it is going to give you the quickest understanding of actually what this is.
Excellent.
And maybe I'll give the flip side of that coin, right? The flip side of that coin as well is there's a lot of interesting work going on, surely from developing applications, and there's a lot of open source content available for you to really understand it if you're interested from a technological standpoint. But there are also several big enterprise companies that are doing very interesting and innovative things. A lot of the financial services companies are there's a whole slew of work going behind central bank digital currencies. And almost every bank has a team that's investing and looking at blockchain-related technologies and how it could apply to their business, right? So there are also opportunities outside of just pure startups and early things going on in the blockchain public space, I'd say. And then there's also several enterprise opportunities. So keep yourself, depends on what floats your boat, I guess, right? So
totally agree. As Dimitry just pointed out, you have to start from somewhere, just do something instead of thinking about that or reading. I just want to add one thing. So most of the influencers are on Twitter and very active on podcasts. So, find 2, 3, or 4 of them and follow them. If you like them, just DM them and say, hey, I like your company. Do you have anything for me to work on? They are very, very open, very, very accessible via Twitter or other social media. So I very often I pin them for different questions. And another thing is just join an interest group. So you don't need to look far. Berkeley Blockchain and Digital Crypto interest group is there. So if you're interested in joining, please let me know. And we also have a Telegram group so you can meet a lot of people with the same interest and join the community. Maybe help with put up a panel. So start from somewhere.
Excellent advice. And don't worry, everybody, you're going to get an info email with all these links. And if you're taking notes now, that's great. But we're going to follow up with all of this stuff in an email to you after this is finished. So, and it'll be part of the recording as well. So I do have a question from the audience as well, a second question, which is pertaining to they're interested in how a DAO appears on the surface to be DeFi, while the voting rights are controlled by token holders, and those tokens are often concentrated in the hands of the few. This sounds like a question for Justine. How can a DAO reconcile this imbalance and become truly decentralized?
Yeah, that's a good question. We need to move away from token weighted voting, or you have this exact dynamic. So we're early in that process. People are working on things like 1 human equals 1 vote as opposed to 1 token equals 1 vote, reputation-based voting, contribution-based voting, etc. The way to kind of get away from that now is theoretically through meta governance, which is collectives of people that do governance together. So in theory, basically, if you delegate to a DAO to vote on your behalf, you're kind of like aggregating individual voices into one collective that could be bigger than any one whale or large token holder. There are like flaws in that, but it gets us closer. But this is a definite problem we have now. There's also like borrowing markets for governance tokens. In theory, that could give people more access to voting rights. In practice, it gets really messy really quickly. But yeah, it's a good point, and many articles have been written about the downsides of token weighted voting.
Okay, excellent. Thank you for that. Next question is, this is open to any of you. Where do you see yourself after ETH 2.0? How do you think its upgrade is going to change the landscape?
I think it'll make it more scalable. I think the roadmap there could get us to a place where you just have ETH2, and this will get pretty technical, I guess, but you will have like the like the security of the whole thing, which is probably the most important thing for blockchains, because you have like these miners, validators that make sure the thing is safe. That's going to be beacon chain. And then you'll have these concepts of like rollups, and each of these rollups, they're like these mini like applications or blockchains that derive their security from the main chain. And they do that because they continuously post data back onto the main chain. And I think with that construct, that's really important, because you could have execution happen on a rollup and then data happen on the main chain. And you could do a lot of really novel things there that we can't do today, where if you look at most of these like state machines, it's almost like everyone in the world needs to share compute resources with like a computer that was developed in like the 1980s. So it's slow, it's expensive, and where we will get to, I think, is where we have application specific rollups. This could be different DeFi applications. This could be different play to earn games. This could be a metaverse project. And all of that activity will happen on that rollup, which is going to be orders of magnitude cheaper. And that still preserves the main special thing about open blockchains in general, which it preserves like the security and the provenance of those assets by still leveraging the kind of security that's been built up. And I think we're going to open up the design space of what's possible, because we're operating in this like compute constrained environment, and everything that we built is almost a reflection of the things you have to do because there's limited resources. And then once you expand that capability out by 10x, 100x, 1000x, I think we'll see a lot more novel kind of applications that potentially work better or do new things to take advantage of lower fees, open up access to like a broader kind of population of people. So I'll stop there. I think that would.
Dimitry, would it help to reduce the gas fee?
You can't really reduce a gas fee because it's a market. If there's like, it's supply and demand. So like you have this limit, it's like a bus. It's like people want to get on the bus, and there's like maybe 100 people that want to get on, but there's only 20 seats. And so like the ticket starts at $1, and then after it's full or like about to get full, someone will say, you know, I'll pay $20 or $50 to get on the bus. And I think on again, this is just for Ethereum, but on ETH L1, that's basically like the model. So it's kind of just like one bus that comes every 10 minutes. And I think the difference is with this new architecture that they're kind of moving to. Maybe it's like cars. So you'll have more cars. They'll have a smaller kind of capacity, but it'll also be cheaper for people in aggregate. Like, I don't know if you're spending less in gas across all of those cars or just on that one bus, but I think for the individuals that'll probably matter more, because instead of paying, you know, $20, $50, $100 per like bus ticket or like per transaction on ETH L1, they'll be paying $2 on a rollup. So I think like the model, like the architecture makes it more scalable. In aggregate, these are supply and demand markets.
Yeah, certainly, at least from my point of view, the efficiency, there's this proof of work to proof of stake change that will occur. All those kinds of things are certainly the right direction. Of course, it's taking maybe longer than the ecosystem would like it to take, but it's all going in the right direction, right?
Interesting. I do have another question. Can I squeeze that one in? This is actually for Coco, but maybe some of you, maybe we'll start with Coco and then see if anybody else wants to chime in. What B2B use cases do you see for stable coins that might drive the usage, their usage?
So stablecoins mostly are used as an on-ramp, off-ramp, vehicle. So the more demand, more activities in crypto world will totally drive up the demand for the stable coins. That's basically. And secondly, I think the regulation, which is not the most exciting topic, will also decide whether the stable coins will be adopted widely or not. Because right now, institutions are not very sure whether they should use stable coins. They're just waiting.
Okay, so you're saying that B2B cases are dependent upon more widespread establishment of governance and regulation. And in other words, businesses will follow policy in this case?
Yes.
Okay.
To some degree.
Got it.
I think what I would like to see is basically stable coins replacing the corresponding banking system. I would prefer all of B2B transaction flows to happen on Ethereum with stable coins rather than Swift. If I'm to be controversial, that's probably not going to happen. But I think that would make things much cheaper because you're cutting out a ton of very expensive and manual institutions.
Yeah, when I say institution, I mean those institutional investors in crypto world. So they have to use stable coins as on-ramp, off-ramp vehicle, which is in most of the cases very necessary. But those institutions decide to stay on the side, trying to avoid those stable coins until there is more clarity about stable coins. And I think the President's Working Group just last year issued a report on whether stable coins will impose any systematic risk to the financial system in the US. But stable coins outside of US actually grow so fast. For example, Tether, which is the largest. But I do see the USDC is picking up and gradually taking away some of the market shares from Tether. And so if there's more clarity of regulation, I really see huge potential for USDC.
Excellent. It'll all be in our portfolios soon, right? I actually have a question for Tanya. It's a supply chain question. What's your point of view about the blockchain in the supply chain, or blockchain solutions for supply chain? Do you think that this will revolutionize this industry in coming years, or the function of supply chains?
Yeah, so maybe to kind of talk about it in a very idealistic way, absolutely, right? It can really transform everything. But when you come back to the realities of today, especially, and I think Justine mentioned, right, when you bring multiple entities together and you have to create a governance model between them, that's when things start to get a little complicated, right? So here in the supply chain world, you're bringing big industry players together, and you're asking them to kind of come to agree to use the same infrastructure, to use the same processes across all of them. So it does take time. There are some very good examples of where blockchain is already creating very interesting impact. There are some interesting even COVID use cases and so on. What I find is there is this journey, and oftentimes when it comes to supply chain use cases, there is a substantial entity that's involved. So, a Walmart of the world, or a large entity that kind of has a lot of supply chain providers and kind of drives the initial adoption of the platform, so to speak, right? And then, that then getting more decentralized over time is where the journey can go, right? And in a sense, having the technology that enables that to happen is the way I see things starting. It's certainly, in the near term, there is so much efficiency. Even if you have a centralized operator of the blockchain and of the infrastructure, there is so much efficiency that this technology inherently brings, because it is designed for a multi-party application. And because it's designed for a multi-party application, there's a lot of efficiency that comes from it at the outset, even though it isn't at a purest blockchain sense, isn't decentralized and all that stuff, right? There's still a lot of value it's generating in step one, and then it can go further from there.
Okay, excellent. Sounds very promising. We have another question. Web3 offers much more ease than Web2 for purchasing. What are the biggest barriers for adoption? And this is also in part a reference to online credit card payments. Does anybody want to tackle that?
You're all jumping at answering this one, but I think I probably think Justine and Dimitry are probably, and maybe even Coco, in a better position to address it. I will say, from my perspective, while again, in the grand scheme of things, that is correct, today there is so much complexity, and Dimitry just rattled off so many things that you got to right. You got to get your wallet. You've got to already have all these things in place before you can make all those things happen. So I'd say the potential is definitely there. It isn't yet consumable by the masses, right? It's so much easier to go to Amazon and buy something because we're all primed to do it, so to speak, right? And there's a lot of human nature and human behavior involved as well.
Yeah, and I was actually confused by the question. I was surprised that Eric said the Web3 process is easier, because it does feel pretty. So I think once you set up your MetaMask wallet and you fund it, then that's probably easier. But even to get my mom up to that stage, I think, I don't think I would even get there. So I think it's actually still trying to get that experience on par. Even setting up your own non-custodial wallet, just that needs to be easier. And even things like addressing, if people see this, do people understand what a public key is? Do they understand what a private key is? Is there a way to abstract that and give a more human readable name for kind of for these things? That's consumer behavior. That's really tough to change when people are just used to entering their credit card and address online. So I think the on-ramp to giving people non-custodial wallets and educating them around what this actually means and why you shouldn't paste your private key into an email form. That is going to be a whole separate multi-year process. It was kind of with contactless payments. That took probably a decade to really get critical mass, just to get people to say take out your phone or your credit card and just touch this reader.
Yeah, I can't agree more what Dimitry just said. It is so painful. The user interface, ease of use, just not there yet.
Yeah, and I think also in the US, looking at this now through the US perspective, we do have alternatives. We have already, a pretty well-established digital financial system in the sense that you can use your credit card. So why would you want to use, something that's seemingly more complicated to set up and also not safe? We haven't really even talked about the fact that you can lose your crypto if you have a hot wallet, i.e. not something that you can take offline. So I think I see more interesting applications of crypto being used in environments and geographic regions in the world where they don't have as many options. And so service providers have come in, this is the whole financial inclusion and fintech for financial inclusion conversation, which is relevant. And we are also doing a lot of research in at Berkeley and at Haas in particular through the Lab for Inclusive FinTech. And so, we may have a conversation about that in next year. So, but for now, I think what I want to do is I want to close out with maybe kind of, we've dived into a lot of detail. We've unpacked a lot of things. And maybe to close it out, let's zoom out and from your perspectives, take a look at the projects or the innovations that each of you feel are the most exciting and that you're particularly most excited about in your areas where you're working in now. What are you excited about seeing develop in the next 12 to 18 months? Do you want to start, Coco? Or somebody?
Give me a second or two. So
yeah, of course.
I could start. I guess there's, like all the things we talked about. One interesting phenomenon has been like this Axie Infinity game that's been like this, 3-4 year overnight success, and there's like articles about it about people in like the Philippines like playing this as like their main job because you earn more playing this game than you do earning like minimum wage. And when you look at the I forget the number, but it's super low. It's like the median dollar amount that people earn every year around the world is like $7 or something. So it's like a really low bar to onboard people into like Web3 gaming. And I think that's going to be responsible for the next 100 million people getting into Web3, which sounds silly, but I think that's actually already been proven just by a lot of these this concept like guilds popping up that are lending Axie assets to like scholars to actually play and earn money. And I met people that are managing like thousands of people in all parts of the world, in like Eastern Europe, in Latin America, and it's like a very real thing. And I think we're probably going to see other flavors of like these play to earn games, and that model again, like as we talked about, like flipping things upside down, that also flips things upside down. I think like Axie has had zero marketing spend. All of that is just by word of mouth from the players. And I think the typical way by which you create games is you have like this AAA studio that pays, $20 million and works on something for 3 years and comes out with a thing. But actually now what you could have is these bottoms up games being built that is community first and economy first, and people that are helping guide the direction of the game are actually the owners of it as well. And I think that's going to be a really fascinating thing to see over the next 2 years. And I guess examples like Loot is one, and Treasure are two that you could like Google and take a look what they're doing.
Okay,
I'm ready.
Coco.
Thank you. So two things are closest to my heart. The first is I really hope that stable coins in the US will be encouraged by the government, because that is one of the key technology that would challenge the old legacy infrastructure such as SWIFT, and also will really open up the cross-border remittance and payment avenues. That's one thing I really, really hope. And also I hope the government will allow stable coins to grow at least side by side with CBDC. That is, just stable coins is private owned and private developed technology. I really wanted to grow further. And the second thing, I really hope to see a bank, a digital bank that would provide guarded environment in which traditional asset and crypto digital asset can all do business within that guarded environment, and that you would save a lot of paying of on-ramp, off-ramp, and regulatory restraints. So these are the two things I really, really hope for and pray for.
That's exciting. Yes, absolutely. Anyone else want to chime in?
Yeah, maybe Coco's always a good segue for me. So I will kind of, to a certain extent, echo several of those things. I actually see it starting to happen. I think the traditional financial services industry is really on some very outdated legacy infrastructure at the moment. The end-to-end systems are highly inefficient, and there is so much value that can be generated there, and I can see it starting to happen, right? So I think I do expect the regulatory environment to evolve, and I do believe regulators are always looking out for all parties involved. It's not like a regulation is just there to create friction, right? So it is a good thing, right? The consumers are protected, the businesses understand what they should do. There are guardrails and governance, and and then the technology can be used. Consumers can benefit from it. Lots of inefficiency and manual steps and so on that exist today can be taken out of the system. Lots of really lovely consumer-related access and opportunities that it can enable. So I'm very hopeful that should happen in the near future, right? There are lots of even more phenomenal things I'm sure that can happen further out, but I think that's quite imminent at the moment.
Yeah, and then I think at RabbitHole, basically we spend most of our time thinking about what the future of work basically looks like in Web3. And so that obviously involves DAOs, and they're not extremely functional right now, but I think we'll get there. And then not just thinking about how do we bring the next wave of users into Web3, but how do we help users become contributors and then work for a DAO ultimately, because that path is not clear right now. It's not even clear like what skills exactly you would want to develop to work for a DAO. What are the right credentials? Like, what does the right resume for Web3 look like? Like, you can't go to a university and like be ready for Web3. So trying to figure out what that looks like for kind of like as we onboard the next wave.
Wow, that's a powerful statement to close on, Justine. What is the future of work? I think the four of you have really tonight given us a glimpse into what that future looks like. And I, for one, am really excited about it. And I hope everyone else watching this is excited as well. Unfortunately, we're running out of time, which is a bummer. I know we could talk a lot longer, but I just wanted to thank you all. Thank you so much to Coco, Tanya, Dimitry, and Justine. You have gone beyond. I really appreciate it. I really appreciate personally your willingness to come talk with us and share your insights and your expertise and your perspectives on the future of blockchain and crypto. We are truly grateful to you for your support of Haas and our vibrant and alumni network. And for those of you watching, as I said before, who are looking to dive deeper into the areas you've heard about today, we'll be sharing some additional resources by email, so watch out for those. Thank you again so much for joining us. I hope you have a wonderful rest of your evening, and go Bears.
Go Bears.
Woo!
Everyone.